It's Brian Shannon from Alphatrends.net. Today's Friday, the 22nd of April, 2022, and this is a pretty ugly picture. We only have, actually, that should be colored green, but oil and energy stocks are the only things positive this year, and everything else across the board is down major and really saw a lot of selling this week. So let's take a look at the charts. Earlier in this week, we saw that we were testing the volume weighted average price from the February low, that is the 2022 low, and it bounced strong from there up to the declining 20-day moving average, the 200-day moving average, and the volume weighted average price off that prior point. If you listen to some of the videos I did on the one on Tuesday, I was expecting that this would become a level of resistance. I certainly didn't expect this type of sell-off from there, though. I thought maybe we would drift lower. But again, the path of least resistance overall is lower. We got back below that declining 5-day moving average. Yesterday, we broke through the support from earlier this week. This morning, what I was looking for, what I was hoping for last night was something along the lines of this, and then for it to sell off next week. The market doesn't care what I want. The market doesn't listen to me. It doesn't listen to you. It doesn't listen to the president or anyone. The market is the collective sum of everyone's opinion. It's the only voice that matters is price. It's the truth. Only price pays. So where that leaves us is pretty hard sold off. The market seems to have woken from its little amnesia here where it forgot that we're in a rising rate environment. The Fed has been clearly broadcasting, but apparently people forgot about it and then just remembered yesterday. So, that's the excuse for the sell off. The fact is, we're below declining 20, 50, 200-day moving averages, and any attempt at a rally is now so far away. What we'll be looking for next week is, if we see some strength, that this is the biggest level of potential resistance it's going to need to get back above. What we'll see is the 50-day moving average will come down like this. The volume weighted average price from the low earlier this year will be in that area, and the year to date volume weighted average price will move at a slower clip like this, but the VWAP off of that peak will start to move down as well. So this market has a lot to prove. We even undercut today this volume weighted average price from the 2020 beginning of 2021 that had been prior support in here a couple times in a area where there was a hard fought battle. And perhaps if we sell off a little bit more on Monday, we see something along the lines of this, that bit could now become the resistance. And if that becomes resistance, then it seems likely we're going to make another test of this volume weighted average price that we had looked at earlier in the year. Below that, we have the volume weighted average price from this gap lower. And of course, the volume weighted average price from the COVID lows down near 383, which still has the possibility it could occur. So don't look at this market as, hey, it's a bargain. I've been more vocal than I think anyone about not buying the dip. To buy stocks in downtrends is absolutely foolish. I don't care what your time frame is. People have been telling me, well, I'm a longer term investor. I'm going to buy for the long term. And, they buy stocks like Sam Adams as it gaps lower like this. And then Sam Adams gets cut in half after that. I had put on Twitter the Archegos, Bill Huang's stocks that he had gotten sold out of with losses back here. He had gotten sold out of losses at this point. This is where it became public. This was Viacom, it's Paramount, and we're still way lower than that. He was also sold out of what were some of the other names? They're escaping me right now. But go ahead and look at my Twitter at Alphatrends. If you're on YouTube and you're not following me on Twitter, I can't tell you how much information, free content you're missing out on there. So, and also if you're on YouTube, please, make a comment, like it, share it with your friends, etc. Nasdaq is really the disaster. We spoke about the fact that it was, making this little consolidation underneath the declining 50-day moving average. Its inability to get back above that finally gave way yesterday, and we're seeing a continuation of this weakness. It's possible that we could continue selling right into Monday, and perhaps a turnaround Tuesday. Maybe we see, it comes down like this Monday, Tuesday morning, it comes down, and then we get our bounce. The fact is, we're in a mega downtrend here, very strong sell off. If we don't get continued sell off and if we see some strength, I would say use that as an opportunity to get rid of anything you wish you didn't still own, and then look for the opportunity of a potential short sale if it does something like this. My guess is it'll continue lower and will probably undercut this volume weighted average price. But again, the market doesn't care what I think. Our job is to look for the most probable scenarios for our time frame and get involved until the reason that we are involved no longer exists, and that means our stops get hit based on a logical level on the chart. The Russell 2000, we've been talking about this ad nauseum about how it's just this big prior band of support, major resistance. It couldn't get through it there. It couldn't get through the volume weighted average price off of that peak. We've got a declining 20, 30, 40 week moving average. We're going to test most likely next week, once again, the volume weighted average price from the COVID low. If we get below that, then I'll update what I think the next potential levels are to look at. But for now, it would just say continue lower, and I will bring up different levels. But again, this is, also the 38.2% retracement. Eventually, if we just continue to fail, then this prior resistance has the potential to act as support. Then the people who are waiting to buy the dip after this gap, because they say all gaps get filled, which is a ridiculous strategy. If you're waiting for this gap to get filled, would you actually want to buy it down there? Maybe you do, I don't know, but you've missed 2 years of action in the meantime. The fact is, it's still guilty till proven innocent. There's nothing encouraging about this chart. Semiconductors had tried to rally. I thought they were going to get up to this little circled area here. I had actually been long this week for a little while, but I'm not going to stay long when the definition of trend no longer exists. When it starts to break down and make a lower high, lower low on the shorter term time frame, I'm getting out of it, and that's exactly what I did. I traded these with a gain. I also pointed out a day trade in Netflix, and the purpose of that wasn't to point out a day trade. That you can find that video, by the way, on alphatrends.net. But the reason for it was to show that you can use the anchored volume weighted average price on every single time frame. You can use them on a monthly time frame and find value. Where are we going to head down to in Netflix? Perhaps down to this volume weighted average price from when that move in 2013 began. A lot of people are probably watching this and thinking that's ridiculous. All the way down to 163. This is a good company. If it's a good company, it doesn't get reflected in the stock price. A good company and a good stock are completely different things. People have been arguing with me about PayPal all the way down for the last 6 months, telling me what a good company it is and how it's a value, and they're long-term investors and they're going to put it away. And they, all started telling me how smart they were over here. But we still had a declining 50-day moving average. When the 50-day moving average, it's guilty till proven innocent. They are more likely to, if they don't scare you out down here, they will likely wear you out during a longer stage one accumulation. There's just no hurry to own a stock that continues to go down. And there are certain fund managers that buy these stocks every single day, and there's no reason to buy these stocks. It is horrible management of a mutual fund, in this case, ARK. It's just terrible management principles, and it's irresponsible to do with your money, but it's even more irresponsible to do with other people's money. This is not good management. It never has been good management. Biotechs continue lower, just as expected. Again, if they don't scare you out, they're going to wear you out. There are always rallies in downtrends, but if the sum of the declines is greater than the sum of the rallies, we still have the mathematical definition of a downtrend, and there's no reason to be a buyer. If you want to switch to shorter term time frames and buy some of these rallies in here, there's nothing wrong with that. But as soon as it starts turning the other way, then you've got to move to the sidelines. Everything that I talk about is based around swing trades. People try to pin me down to what the longer term trend is. I really don't care. People try to pin me down to what a day trade should be. I really don't care. I'm interested in the swing trades. That's my specialty. If you have comments about, how smart you are for buying long term and that's what Warren Buffett does or whatever, that's great. Just save it. But, wait for the stocks to show a strong base. Don't be buying. These are the things I spoke about last week. These are the stocks I said if they don't scare you out, they'll wear you out. How many people thought they picked the low when they bought at 85 and it rallied to 150 in Upstart, but didn't sell and now they're in a losing position? Or in Roku, or like I said, in PayPal, on and on. You can list these examples. They are over and over again. So many disasters in this market. ZM is one that's going to head to a new low as well. Shopify has been a disaster. And the path of least resistance is lower. Why would you expect to make money on the long side unless it's for a bounce? But even when you get a bounce, the sum of the declines is greater than the sum of the rallies, so you're better off looking for the short sales as it breaks down after the rallies have petered out and it breaks down. It's all the same all the time. There's nothing different going on here. The financials rallied right up to the volume weighted average price off the peak, the 20-day moving average and the 50-day moving average, which are declining. We've been talking for a couple weeks about how this looks like the Russell 2000 maybe 4 or 6 months ago. And guess what? I wouldn't be surprised to see the financials in the next 6 to 9 months and probably sooner down here to test the volume weighted average price from the COVID low. That's also the prior resistance. It seems highly likely to me that that would occur. Energy names finally starting to cool off a little bit. We've been talking about how who buys the breakout when it's so far extended. People are looking at this going, wow, it's a breakout. It's not a good quality breakout. A good quality breakout comes from a low level of volatility like this. That's a breakout right there. This is a breakout past some resistance. This is a breakout. And when you look to whatever your time frame is, you could call, this a breakout right here on the 10-minute time frame. But guess what? You buy the breakout and you set your stop. It moves higher, you raise your stop. It moves higher again, you raise your stop underneath the most recent relevant higher low. If it comes down and stops you out, you accept it and you say, hey, I made that little bit. It's better than buying it here and still holding it over here, wondering what's going on with oil or whatever it is. Anyways, I hope it wasn't a horrible week for you in the market. I know it was for a lot of people. Learn to listen to the message of the market and do better.